In today's episode, we will be looking at the greenback, the Commonwealth, what's going on with the giants in Asia, Japan and China, all with Bob Mason of FX Empire. This is The Week Ahead. Hello, Bob, and thank you once again for joining us. It's the middle of January. The start of the month was pretty hectic, but what can we expect in the second half of the month, especially next week? Are we expecting it to be quiet, or can we expect some turbulence along the way?
Despite calls for the dollar to be on the back foot through this year, we've seen the dollar recover from sub-97 levels from the start of the year. Economic data out of the US has been a lot better than we'd anticipated. Expectations of a recession have abated, and we've seen yield differentials rise in favor of US treasuries. So we've got yield differentiations favoring direction inflows into the US dollar. We've got economic data that continues to support a pickup in US economic activity. We've also seen the US and China phase one trade agreement that actually favors the US economy more so than that of China, with tariffs still in place on Chinese goods, and obviously China being demanded to crank up a large amount of imports of commodities from the US, which should support US growth. So all in all, those expecting the dollar, to be on the sink, it's unlikely for now. And anyone who's recently gone to bet against the dollar have had their fingers burnt. Looking at monetary policy elsewhere in developed economies, we've got Eurozone data showing doom and gloom, the RBA on the defensive. Things in New Zealand look to be slightly better, but all in all, there's little reason for the dollar to take a tumble anytime soon, and that's even with Trump's willingness or desire for the Fed to hit zero rates. Fed looks to be on pause for now on monetary policy, particularly with the data showing some improvement. They'll need to see how things progress with the trade war and the phase one agreement and how that filters through to the economy. Labour market conditions are sound, so that should spell positive for the Fed and a hold.
So with the bushfires still raging in Australia, the local authorities are fighting really hard to control them. How is that having an effect on Australian economy and the Aussie in particular, the Aussie dollar?
For the Aussie dollar and Kiwi dollar, we're seeing signs of monetary policy divergence at the moment. Aussie dollar has been under the hammer recently, not much upside as expectations rise of an RBA rate cut at the beginning of next month. Forest fires are expected to have weighed on consumer confidence and on consumer spending and possibly employment. So all in all, the major concerns of the RBA may come to light next week when we see employment figures for December out of Australia and consumer confidence numbers for January. Weak numbers there, could put the Aussie dollar under significant pressure. So expect the Aussie dollar to be under scrutiny next week. For the Kiwi dollar, we've got fourth quarter inflation figures next week. Expectations are for inflationary pressures to be on the rise, easing any expectations of an RBNZ rate cut anytime soon. All in all, monetary policy divergence favors the Kiwi dollar. So Aussie dollar under pressure, Kiwi dollar should find some support. The phase one trade agreement's no bad thing for either, but obviously we need to see how the effects of a rollback of tariffs filter through to the respective economies.
So let's talk about the Asian powerhouses, Japan and China. How's it looking for those two economies and their currencies? What can we expect in the week ahead?
Last week, we saw the GDP numbers for the fourth quarter out of China. While holding its own and not slowing any further, the numbers were still not great. Obviously, the effects of the ongoing trade war were reflected in the numbers. The good news was a sharp pickup in industrial production, though that remains to be seen whether it was pre-Chinese New Year or an improvement going forward. We saw manufacturing numbers, not impress the prior week. So what are we expecting out of China next week? It's a shortened week with Friday, the markets closed. The PBOC is in action on Monday, so let's see if they provide any further support. After the phase one trade agreement, they might stand pat for now, having reduced borrowing rates recently. There's no stats, so it's all about trade now. It's wait and see. Let's see what happens. Will China go ahead and crank up the imports as they're expected to do to support a scale back in tariffs? That remains to be seen. The US spoke on Thursday of, staged tariff rollbacks through the year rather than waiting until the end of the year, which provided some support for risk appetite on Thursday night in the US markets. So not much out of China other than PBOC action. Looking across to Japan, we got trade data and inflation figures. Bank of Japan Governor Kurudo spoke at the early part of last week, promising the markets of further support should that be needed. Looking at the numbers, of late or even beyond that, we're wondering when the Bank of Japan is or if they ever will step in to provide further support. So trade data, a widening in the trade deficit, obviously that's a negative for Japan, and inflationary pressures are nowhere to be seen. So if that isn't a green light for the BOJ, then there probably will never be one.
And lastly, let's discuss geopolitics. Can we expect any significant events due in the next week?
We're expecting a relatively quiet week ahead on the geopolitical front. The last time we said that, Iran and Iraq nearly went to war. But looking at what's on the ticket, we've got obviously Trump's impeachment. People were sworn in, Senate members last week, so it should be full scale ahead, and expect plenty of attention from the news wires through the week. The reality is, however, that Trump's unlikely to be ousted from office, with the Republicans unlikely to jump ship. So all in all, the markets will likely stay relatively calm. Obviously, there'll be some oohs and ahs as the bad stuff gets rolled out in front of the cameras. On the Brexit front, it's Britain's last week as a member of the EU before it enters the transition period. Again, optimism following Boris Johnson's victory at the general election. Economic data hasn't been great, but there are hopes of a pickup, and that's been really what's been supporting the pound of late, despite the spattered weak data that we've seen over the last week. So not much to speak of, and that should really leave the markets in the hands of central bankers, with the Bank of Canada and the ECB in action in the week ahead.
Thank you once again, Bob, for joining us. That was the week ahead, and we will see you all again next week.